What's up everyone, welcome back to our page, and this video will be discussing the resolution of shareholders approving the adoption of a share. Now, an incentive scheme. You also have a share incentive scheme, shares issued in terms of a share incentive scheme that has been approved by the JSE and by a minimum of 75% of the votes of shareholders entitled to votes on the resolution. It is important to note that any amendments to the material provisions of a share incentive scheme or the adoption of a new share incentive scheme must be approved by the JSE and by shareholders on the same basis. Now, the Companies Act creates appraisal rights for dissenting shareholders. In cases where the requisite majority of the shareholders of a company has been approved, a fundamental transaction, that is a disposal of the whole or greater part of its assets, or undertaking or a scheme of arrangements, or a merger, and also an amendment to its memorandum of incorporation by altering the preferences, rights, limitations, or other terms of any class of its shares which will have a material adverse effect on the rights or interests of the dissenting shareholder. Now, dissenting shareholders, the appraisal rights allow a dissenting shareholder to sell its full shareholding back to the company at the fair value of the shares. Now, this creates an effective out option for the minority shareholder in circumstances where certain steps must be followed. Now, dissenting shareholders may inadvertently forfeit their appraisal rights if they receive correspondence from investee companies tabling a resolution to vote on any of these matters and do not take the procedural steps. This means that if your company holds shares in an investee company, special attention must always be paid to notices or correspondence issued by the investee companies convening a meeting or tabling a resolution to decide on any of the matters that I've just mentioned. Now, the procedural formalities are as follows. Your first step at any time before the proposed resolution is to be voted on. The dissenting shareholder must give the investee company written notice objecting to the resolution. Your second step, the dissenting shareholder must then vote against the resolution. You need to note that it is not sufficient simply to abstain from voting. The dissenting shareholder should ensure that his dissenting vote is adequately recorded by the investee company. And then your third step is, if the resolution is passed, the investee company is obliged to notify the dissenting shareholder within 10 business days of the adoption of the resolution. Now, the dissenting shareholder then has 20 business days from receipt of the notice, or if no notice is sent by the investee company within 20 business days of becoming aware that the resolution was passed. Now, to send the investee company a written demand to pay the dissenting shareholder the fair value for all shares held by that shareholder, a copy of this demand must then be delivered. Step 4, after receiving the demand, the investee company will make an offer to the dissenting shareholder to buy its shares at a price as determined by the directors to be the fair value thereof. Now, the dissenting shareholder then has 30 business days after receipt of the offer to accept the offer or to approach a court for relief if it considers that the price is not the fair value of the shares, failing which the offer lapses and the dissenting shareholder has no further appraisal rights. The offer will include a statement showing how the fair value was determined. Now, dissenting shareholders who disagree with the fair value can refer the matter to court for a final determination for the fair value, and the board should consider the following factors holistically on a substance over form basis in assessing independence of non-executive directors. The director now is a significant provider of financial capital or is an officer, employee, or representative of such a provider. Secondly, the director participates in a share incentive scheme of the company. Thirdly, the director owns shares in the company material to such director's personal wealth. Fourthly, the executive manager during the last 3 or the director was the executive manager during the last 3 financial years or is related to such executive manager, the director has been designated auditor responsible for the statutory audit of the company or a key member of the audit team during the preceding 3 financial years. The director is also a significant or ongoing professional advisor to the company other than as director. The director is a director or member of the executive management of a significant customer or supplier to the company, or the director is a director or member of the executive management of another organization which is related or is a related party to the company, or the director is entitled to remuneration contingent on the performance of the company. Now, a company's remuneration policy, both King 3 and King 4 recommend that a company's remuneration policy be submitted to shareholders for their approval by non-binding votes. Under King III, this entails a vote supported by an ordinary majority. King 4, however, goes further in that it creates a compulsory engagement with shareholders should the remuneration policy or its implementation be voted against by 25% or more of the votes exercised. Now, King 4 requires a 3-part disclosure for remuneration, including the remuneration background statement, policy, and implementation. It has emphasized transparency and accountability regarding the disclosure of directors and prescribed officers' remuneration, and requires disclosure of inter alia, amongst other, the remuneration of each member of the executive management of the company, and particularly addressing whether such remuneration is fair and responsible in the context of overall employee remuneration in the company. An account of the performance measures used and the relative weighting of each such measure, as a result of which awards under variable remuneration incentive schemes have been made. Separate disclosure of any payments made on termination of employment or office, including the reasons thereof. A statement regarding compliance with any deviations from the company's remuneration policy. That is it for this video. If you guys enjoyed this video, or if you want to know more, please do visit our website www.𝗪𝗲𝗯𝘀𝗶𝗶.co.za, where you will find templates and a lot more information. Please do not forget to follow us on all our social media platforms, as well as do subscribe to our YouTube channel. Give this video a thumbs up. Click on the bell button for post notifications and stay tuned for more videos like